week's Forex Focus. I hope you've all had a good week in the markets and managed to take advantage of some of the lovely opportunities that were out there this week. In this week's episode, we're going to talk about a couple of things. Obviously, we're going to look at the opportunities that we'll be setting up in the FX markets in the week ahead. But I also want to talk to you about one of the big mistakes that a lot of traders face. And there's a couple of charts that I want to show you today that really illustrate this. It really shows you where a lot of the retail markets go wrong, where a trading setup sort of seems great on the surface, but when you take a step back and you look at the bigger picture and you look at, the trade and the overall context of the markets, why traders go wrong and what it is that they're doing that's basically self-sabotaging themselves and getting them into trades that really never stand any chance of success whatsoever. So in today's video, we're not only going to look at the opportunities that we'll be setting up in the week ahead, but we're also going to have a bit of an educational session where I show you really and truly where you probably are going wrong a lot of the time when you're getting into your trades. Those trades where you get into it and almost immediately it starts going against you and trading the other way. And I'm going to show you exactly why that is in today's episode. So without further ado, let's jump over to the charts and take a look at what's setting up. So the first one we're going to talk about is the Aussie Frank. Now the Aussie Frank here, as you can see, is just broken out of some highs. If we go over across to the daily chart here, you can see that basically it's just broken out above these highs over here. So we've got a structural high, two levels of resistance there. And if you look back on the chart, it's also a level of resistance here, then a previous level of support there. So quite a powerful level there on the Aussie Frank at around the 0.7287 level. The market has since broken out above that. And what we're going to be looking for this week is ultimately for the market to pull back most probably on the 1 hour chart. So if we zoom in there for you, we're going to be looking for the market to pull back to around this sort of area around here. So there's 0.7281 around that area. And if it gets beyond that, then the next stopping point will be the 0.7239. But ultimately around this area here, this little cluster of congestion over here, be waiting for the market to pull back to there and then give us some sort of a reversal pattern, whether it be a candlestick pattern, a 1, 2, 3 reversal, or just some sort of an indication that the market wants to continue off on this momentum move that we're seeing here. So we can see the market has gone from 0.7081 all the way up, so nearly more than 300 pips there, to around the 0.7400 level. So we've had quite a big move on our hands last week, as you can see there, and we're now going to be waiting for the market to pull back just a little bit to around this area here, where we'll then be looking for an opportunity to go long. We then have a very similar opportunity on the Aussie dollar, as you can see here, again broken out of structural levels, and this is something we're going to talk about in just a few minutes, and why this is such a great sign. So we want to see the market hold above this level here. If it can hold above that level, okay, give us a little bit of a pullback, obviously, so we've got somewhere to get into the trade. But if it can hold above this level here, then we're totally going to be expecting some sort of a move at least up until these previous levels of support over here. So if I just put in a horizontal line there, so around this area here, we'll be looking for the market to kind of gravitate towards this high here if it can hold out above this area here. Now, we'll be looking for the opportunity probably again on the 1 hour charts, where we're most likely to see the pullback and most likely to get the opportunity to get into the trade. So I'll be waiting for the market on the 1 hour chart to give us some sort of a harmonic move back towards like the 50% area of this prior up move here. But the one thing that we don't want to see the market do is settle back into that range that it's just broken out of, okay? But somewhere in this area here, as you can see, let me just put in a horizontal line. So somewhere in this sort of area here, if the market can pull back to somewhere around there and give us a potential reversal pattern, then we'll be completely all over that and looking for the opportunity to take that long. We then have the euro pound, which is just broken to the downside. So broken beneath the 100 moving average on the 4 hour chart. The daily charts, the picture hasn't changed all that much. So we're still in an uptrend here. Okay, so this isn't by any means the highest probability trade in the world, but what I'm expecting to see from this trade here is the market pull back a little bit more to around the 0.7530 before the market then carries on its uptrend and sort of rallies up towards the 0.80 level and beyond there. And the reason that I think we're going to get some sort of a breakdown here is all from what I'm seeing on the 1 hour chart. Now the 1 hour chart, you can see we've got quite a lot of momentum to the downside. So first of all, we've got these 4 candles here. The market consolidates a little bit. It then breaks down even lower. It comes down, consolidates a little bit, and then we've got a massive momentum move to the downside here. And now we've got quite a nice harmonic pullback, and the market failed to get above this 100 moving average here. And if we put in a trend line, you'll see that basically what we're looking for here is for the market to hold beneath this trend line here. And if the market opens down later on this evening, obviously potentially we'll miss that opportunity. But if the market can open around this level here, then come Monday morning, we're going to be looking to sell through the lows. All right. And if you don't know what I mean by that, we'll be looking for the market to consolidate somewhat around this level. Then I'll look for it to sell beneath that low there with a stop somewhere above the highs in anticipation of the market not only coming down towards these lows, as you can see here, but breaking down beneath those lows and heading down towards this sort of previous area of congestion down here. So quite a good risk reward trade potentially we could have on our hands in the euro pound going into next week. We then have the pound yen and the pound dollar, and they both pretty much tell a very, very similar story. If you look at it from the hour perspective, you would say, well, the momentum's to the upside, so I'm going to look for a pullback and I'm going to look to take this long. And this is one of the areas that a lot of new traders go wrong. They're just looking at the chart in the context of the one time frame. But if you then go and take a look at, let's say, the 4 hour chart over here, or even the daily chart, you can see that actually this little bit of a momentum here that's showing itself on the 1 hour chart is a pullback and a much bigger downtrend on the higher time frame chart. So what we're looking at from the pound yen and the pound dollar, and I'll just flick across here because you can see that they're pretty much carbon copies of each other. You see that the pound on the price action on the pound dollar is pretty much the same as on the pound yen, where we've got a nice sort of momentum move to the upside on the 1 hour chart. But if you take a look at that on the 4 hour charts, then you can see that actually they're just part of bigger downtrends. So for both of those, pound dollar and the pound yen, we're in the prime area here. The market's pulled back enough to give us an opportunity to go short. So come later on this evening or first thing Monday morning, I'm going to be looking for the market to break back down below here, give us some sort of a bearish candlestick pattern, at which point I'm going to take a short with my stop above the highs and look for the markets to at least attack down towards these lows around here. Okay, then if it can get beyond those lows, there's no reason with all of this momentum behind it here that the market can't then break even lower and go, sort of down towards these areas around here. So potentially a massive, massive, massive risk reward, positive risk reward trade on our hands in both the pound dollar and the pound yen there. And they're the two that sort of look most imminent to set up and give us an opportunity. So now let's talk about what I mentioned to you at the beginning of the show here, areas where a lot of traders are going wrong and they don't even realize it. So they're getting into trades that really stand no chance of success. And we've got a couple of charts to illustrate this. The first one is the Aussie Yen, sorry. Now with the Aussie Yen, as you can see here, we've got massive momentum move to the upside, and it looks very, very similar to what we saw in the Aussie dollar and the Aussie Frank earlier on in the show. But the key difference here is look at where it's trading. So whereas with the Aussie dollar and the Aussie Frank, it had broken out above a resistance level, so it had broken out above structural levels. With the Aussie Yen here, it's trading directly into it. So if we get the pullback in this chart here and the market gives us an opportunity to go long, we're going to be trading directly into this structure high here. And that really isn't a high probability trade, because if the market is going to turn around anywhere, excuse me, if the market's going to turn around anywhere, it's going to turn around at this level here. Okay, this previous level of resistance where you can see that the market found some massive momentum, some massive bearish energy there, and the market then dropped to the downside from 86, basically 86.00, all the way down towards the 77.55. So we've got a massive, massive move on our hands here. Now, if the market comes back to that level, as you can see here, that's where we're expecting it to turn around. So if it's going to turn around at any point and continue this downtrend here, it's going to do it at this level here, which is why trying to take a momentum move to the upside here just kind of, it signals nothing but trouble. So yes, sometimes you'll get into those trades that will make you money, but 9 times out of 10, those trades will cost you money, and therefore you don't want to be in them. And another example of that is this one right here in the Aussie Cad. So the Aussie Cad, again, on the 1 hour chart, if you take a look here, is breaking to the upside. So it looks similar, and I'll pull up the Aussie dollar chart for you. So it looks similar to this chart here, right? If you just look at it from the 1 hour perspective. However, looking at the Aussie Cad from the daily perspective, you can see that actually it's not as clear a chart here, and you are going to be trading into a level of resistance over here, and you just don't want to do it. It really does spell trouble for your trades. If you get into trades at these sorts of levels here, then you're just asking for trouble. Okay, and they're the areas where you'll get into a trade, and then suddenly the market will turn around and it will stop you out, and you'll wonder why. And it's because you've got into a trade that's trading directly into resistance levels. So you really, really need to take the whole overall chart picture into account when you're looking to take a trade, and not just trade a setup in isolation, because when you do that, you're going to put yourself in a situation where you're going to take more losing trades than you will winning trades, and that's going to affect the rest of your trading, even if you have quite a solid strategy to start with. So regardless of what strategy it is that you're trading, you really want to start to put the overall context of the market or take the overall context into account. And then you'll be putting yourself in a position where you're going to take better trades, you're going to be more consistent in your trading, and your trading results are going to be more reliable. Okay? So that wraps up this week's Forex Focus. I hope you enjoyed that. I hope obviously you're going to be able to take a lot of that into account. As I said to you, that really is an area where a lot of traders go wrong. A lot of retail traders, they have their strategy. They think that, well, they backtest and it is a profitable strategy, but they don't take the overall market context into account, and they end up getting into trades that really just stand no chance of success. And I don't want you to do that. Okay, so regardless of whether you're trading a momentum-based strategy like this one here, or you're trading sort of like a false breakout strategy where you're fading the breakouts, whatever it is, please try and take the overall market into account. Trade from areas that make sense, okay? And don't trade into areas that don't make any sense at all. So don't be trading into, big levels of resistance or big levels of support, and then, when the market turns around and stops you out, wonder why. Because everything, your success as a trader isn't just based on the strategy, it's also based on your psychology. How do you react to things? And no one likes losing. And if you take loser after loser after loser with a strategy that otherwise looks like a pretty solid strategy, you're going to blow up your account. You're going to make mistakes that you don't need to make. So start from tomorrow. When you look at your trades, any trade that you take, look at the overall market context. Look at the picture, okay, and then take your trades based on that. So if you're trading into a level of resistance, don't take the trade. There are loads of trades out there. You don't need to take every single opportunity that your system presents if it doesn't make any sense from a bigger picture perspective. Okay? Now we've got a couple of announcements for this week. First of all, I'm going to be doing a webinar for the London Investment Week this week, and we're going to be doing it on Friday at 5 p.m. I will send out an email later on this week just to remind you of that and to give you a link to sign up to that webinar. So please keep an eye out on your inbox this week, because it's going to be a great webinar. I'm going to show you a technique that lots of professional, successful and profitable traders use, but very, very few retail traders, very few unsuccessful traders know it even exists. Okay, and it's going to be one of those where I'm going to be able to prove to you that trading is actually something that can be consistent. Okay, and it is something that anybody really can learn. As long as you take the right approach and the structured approach. And this little technique here, you're going to look at it and you're going to think, wow, how that is so obvious. Why don't I do that? So keep an eye out on your email this week. As I said, I will be dropping you one probably Wednesday of this week here with the login details for that webinar. So, and that's going to be on Friday at 5 p.m. Also, our mentor program is going on sale tomorrow. Okay, and we've sent a few emails out over the past couple of weeks just giving you some information about it, but it actually goes on sale tomorrow. So please, again, check your email tomorrow. We'll be sending you all of the details there. where you can read up on basically how you can work with Nikki and I personally. So we'll be holding your hand throughout the whole process. It's a 10-week program. It is the best program out there as far as we're concerned. Yes, obviously we're going to be biased, but we're giving you everything in this program, so there's nothing that's going to be missed. And at the end of it, you're going to have an amazing, a structured approach to trading the markets and to putting your money where it's going to make you money, rather than just trying to trade euro dollar just because it's euro dollar. So we're going to show you our approach to the markets, the way that we trade our big money, and that's coming out tomorrow. So again, keep an eye out on your emails. That will be coming your way. Otherwise, thank you very much for watching. Please remember, as always, this is for educational purposes only. We're showing you what we're doing with our own accounts. All right, this isn't trading advice in any way whatsoever. We're not telling you to go ahead and go and take that trade. We're just saying this is what we're going to do with our own accounts. So it is for educational purposes only. Thank you very much for watching. For all of you mothers out there, happy Mother's Day. I hope you've had a lovely day. I hope you've been spoiled. And everybody's been sort of like waiting on you hand and foot, doing everything you want, and you've had a lovely day. Okay? So thank you very much for watching, and I'll speak to you all in next week's Forex Focus. Take care now, and good trading.